Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services and another USDA Loan Pro video quick tip. So how do unreimbursed business expenses affect USDA loan qualifying? Commonly known as 2106 expenses due to the associated IRS tax form, this is a frequent question and one that can have a major impact on USDA loan qualifying. Today's video tip is critical to the qualifying process. So let's get started with the details. Before we get started, today's topic relates strictly to the mortgage qualifying process and not about tax advice. If you have any questions regarding eligible deductions for tax purposes, please consult your tax professional. So what is an unreimbursed employee business expense? Per the IRS, generally you can deduct on Schedule A, Form 1040, line 21, unreimbursed employee expenses that are paid or incurred during your tax year, for carrying on your trade or business of being an employee, and ordinary and necessary. An expense is ordinary if it is common and accepted in your trade, business, or profession. An expense is necessary if it is appropriate and helpful to your business. An expense does not have to be required to be considered necessary. Unreimbursed business expenses affect USDA loan qualifying in two different ways. First off, depending on the type of expense claimed for the deduction, it can reduce the income calculated for loan qualifying, otherwise known as repayment income, thus lowering the eligible loan size or sales price a home buyer can qualify for. However, in the case of a USDA loan, we also have to consider county income limit calculations. These same 2106 expenses can also be deducted from that to help reduce the annual income calculation. I know it sounds complicated, so let's review the following example to help illustrate. The potential homebuyer claims $6,000 in unreimbursed business expenses related to uniforms, meals, travel, and education that were all work-related. Pay stubs and W-2s in the file support a salary of $80,000 per year, which is also their annual income. The USDA income limit for their household size is $74,750. The unreimbursed business expenses are reviewed and then deducted from the income used to qualify for the loan, but also deducted from the annual income, bringing this income calculation back in line and now eligible. Now I know what you're saying. Qualifying for a USDA loan seems like it's both difficult and overwhelming, but when you're paired with a lender that specializes and understands this unique program, it is a match that can help open the door to home ownership. My team is here to help on your next pre-qualification, so just call or email to discuss your scenario and let us show you the Metroplex difference. And don't forget, we are known for keeping home buyers and realtors updated through each step of the process, from pre-qualification to closing, along with one easy point of contact. And I want to thank you for the continuing referrals and trusting us with all of your mortgage needs. And if you've not yet done so, please download for free our USDA Blueprint for Success with a link below. It is a great educational resource to share with both buyers and sellers. Remember to subscribe for free on the right, post on Facebook, and your comments below are appreciated. I want everyone to make it a great day and look forward to seeing you right here for the next Tip of the Week.